Hello listeners, and welcome to Plugged In, the energy news podcast from Montel, where we bring you the latest news, issues and changes happening in the energy sector. Will Iran follow through on its threat to close the Strait of Hormuz, a crucial waterway for global LNG trade? A benign threat that was lurking in the background is now creeping its way back on the table as the conflict between Israel and Iran, and now likely the US, escalates. While we've seen most energy markets respond sharply to the events of the last week, none seem as vulnerable or as sensitive as LNG. Why? I'm going to be speaking to experts from Kpler and Eurasia Group about the impact of the conflict on LNG. But first, I'm joined by our Deputy Editor-in-Chief, Laurence Walker. Welcome back to the podcast, Laurie.
Thank you, Richard.
Laurie, we're recording this episode on Thursday morning, and the situation is very, it's very dynamic. The things that are happening, things are changing very rapidly. How have the markets responded to the escalating conflict between Israel and Iran this week?
Well, yes, I mean, certainly, as you say, it's been a very, there's, a lot of changes. Every day, something new people are looking to. The market's reacted very bullishly, as could be expected. I think as of today, gas prices, or at least front month TTF prices, are still up for around 10% on the week. Yesterday went over 40 euros per megawatt hour for the first time since April, I think it was. And so the market is obviously concerned. I think at this stage, a lot of it is the sort of the fear factor, the fear of the unknown. People are concerned, certainly, that there could be some major disruptions to supply as a result, but also they're sort of hedging their bets. There is to some extent a relatively low possibility of some of these things actually occurring. But obviously the fact is, if something did happen, that could be major for the market.
There seems to be, I think the consensus is that there's an unlikely, but still growing threat that Iran could close the Straits of Hormuz. For those listeners who aren't aware, could you explain why this is such an important route for global LNG? So why is this so crucial, this little strait in the Middle East?
Yes, I mean, this is obviously a significant threat, and it's the major point people are concerned about. I mean, the Strait of Hormuz, it handles around 20% of the world's LNG supply. The cargoes from Qatar and from UAE. If this amount of LNG was suddenly cut out of the market, it would obviously have an enormous bullish impact. People would be struggling for cargoes elsewhere. We've looked into various, we have stories on this week as well, but I mean, the likes of America, for example, and other providers would not be able to meet that level of, supply if it does go. At the moment, most of the bulk of their export, China is probably one of their biggest customers at the moment. And Europe takes not so much from there, maybe 4 or 5%, I think, of the LNG that comes out of that. But because LNG is this sort of global pool, if you take something out of it, then whoever doesn't have the cargoes will have to look elsewhere for it. If China isn't getting its cargoes, it's going to look elsewhere. It's going to look to America, they'll look to other places, and we'll put it in competition with Europe. And we can see a sort of tug of war for cargoes. So, being a global market, this is something which is potentially a big concern. If it happens, that's the point. Yeah,
absolutely. That's a big if. But thanks very much, Laurie. I know this is a story that's developing and that you and your team are covering. So I'll let you get back to the newsroom to cover this for Montel News.
Thank you very much.
So, how serious is Iran's threat to close the Strait of Hormuz? And how would this impact global LNG trade? I'm pleased to be joined by Laura Page, Principal LNG Analyst at Kpler, and Henning, Gloystein, Practice Head of Energy, Climate and Resources at Eurasia Group. A warm welcome back to the podcast, both of you.
Hi, Richard.
Laura, can we start with you? What vessel movements have you seen this week around the Strait of Hormuz in response to the escalating conflict?
Yes, well, we are watching this really closely at Kpler. Of course, we're a ship tracking service, so we can see all of the live vessel movements. Firstly, it's important to say that flow is continuing through the Strait of Hormuz, and we are seeing Qatari and UAE volume continue to move out of the Strait of Hormuz. Of course, it's a critical choke point for the LNG market. 20% of global supplies come out of there. However, we are seeing some, shall we say, delays and disruptions of vessels trying to get back to Qatar and UAE to load. Firstly, Qatar Energy has asked vessels to basically wait outside of the Strait of Hormuz until a day before loading. So we are seeing some ballast vessels waiting outside of the strait before they do go to load. But we are seeing them heading back to Qatar eventually. They're going at quite a high speed, though, through the strait in order to get back to Ras Laffan. I was looking at one vessel yesterday and it was going at nearly 20 knots, so very fast. Also seeing some laden vessels that are trying to get into the region to deliver into Kuwait and Bahrain as well. One vessel over the weekend did stop outside of the Strait of Hormuz. It was a US laden vessel trying to get over to Kuwait. It's waited outside of the Strait of Hormuz for about 5 days, but yesterday it did go into the Strait of Hormuz again at quite a fast speed. Also looking at one vessel going to Bahrain. It's carrying Nigerian LNG and it's outside the strait waiting to pass. So some kind of disruptions going on, but overall it's pretty much business as usual.
That's very interesting, Laura. And Henning, if I can turn to you, how likely do you think it is that we will see a temporary close of that strait? I mean, Laura's saying that things are sort of pretty much happening, or things are going on as normal. But what do you see the possibility of a closure of the strait there?
Yeah, so we see the risk of a total closure of the Strait of Hormuz, which would mean that literally none of the movements that Laura just described are possible at about 20%. So that is a high impact, low probability risk. The reasons why we think it's only 20% is, first of all, we actually think Iran at this stage is reluctant to actually attempt that. We've seen the GCC countries, so the Gulf Cooperation countries, they put out a statement in support of Iran. So countries like the UAE and Saudi Arabia are clearly trying to avoid being targeted. And the second reason is that the Western naval presence in the Strait of Hormuz is immense now. There's already a U.S. carrier group with 3 aerial defense destroyers, several submarines, there's minesweepers, there's several European air defense frigates there and destroyers. So we actually think that even if Iran attempted a full closure of the Strait of Hormuz, they wouldn't quite manage it because there are plans for convoy systems to be put in place, which would reduce the volume and which would still have the risk of single tankers being hit, but would probably not result in a full closure of the Strait of Hormuz. And lastly, there is still insurance available. This is an important nugget of information that I find is sometimes misrepresented at the moment. You see all the headlines, and they're understandable that insurance rates are surging. The fact of the matter, though, is that insurance rate is still available because maritime insurers do provide wartime insurance for shipping in this space. That actually means that you can get your vessel insured even if you're at risk of being hit. So that's why we don't think it's likely. But of course, 20% also means we don't think it's impossible. So in case of a major escalation, the US getting involved, Israel trying to strike or striking Iran's oil and gas export infrastructure. If Iran's backed into a corner, who knows what will happen. So it's something that's worth closely monitoring, as Laura said.
Just following on from what you're saying there, Henning. So if the US does enter the conflict, does a blockade seem more likely?
So if the US enters the strikes on Iran, yes, an attempted blockade of Hormuz by Iran does become more likely, of course. At the moment, one of the reasons Iran is not trying to blockade or massively disrupt shipping through Hormuz is because they're trying to avoid the United States to get involved. If the US or when the US is involved, that incentive for Iran to hold back is gone. It's worth, though, pointing out that there is probably some disruption already going on. You've seen the warnings by the UK maritime trade operations. about massive tanker jamming, so GPS jamming. I mean, that stuff doesn't come out of nowhere. Now, I don't know who's doing this, but of course that is some form of interference. So it's worth keeping in mind. And then, as Laura says, that these tankers are going at 20 knots. That's taking a big risk. Tankers at 20 knots speeding is it's not the same as a little car going a little bit too fast.
No, absolutely not, Henning. Laura, how do you see this playing out?
Our base case situation is the Strait of Hormuz doesn't shut. Of course, it is vital for Iran to try and keep this open, to try and get its oil out of the Strait of Hormuz and over to China as well. So that's our base case situation. But yeah, as Henning says, we can't rule anything out at the moment. Of course, if this does happen, it has a massive impact on Asia, particularly major buyers of LNG. China is the biggest buyer of LNG from the region, and also India as well. So they would be the biggest markets affected by this.
We've seen gas prices in Europe hit 10-week highs, and they're still rising. And there's still a lot of nervousness in the market. So, I mean, if we're talking a blockade or, a closure of that strait, how would that impact prices in Europe and the movement of sort of LNG globally?
Prices would absolutely spike. Depends how long this lasts, of course, but prices would have to rise because you'd essentially be shutting in 20% of global LNG supplies. If we look at what Qatar, for example, exported through the Strait of Hormuz last year, 94% of their supplies went through the Strait of Hormuz. Of course, the remaining 6% went to regional local markets like Kuwait. So if you take this supply out of the market, it's very big for the market, of course. As I mentioned, Asia is the biggest buyer of this LNG. The biggest importers, China, India, South Korea, Japan, Taiwan, etc. But also you have South Asian markets that are incredibly reliant on Qatari LNG. For example, Pakistan, 90% of their imports come from Qatar. So you would have to see them going into the spot market. Of course, prices would be very high. This would be very painful for these markets in order to replace that supply. But we can't also forget Europe. Europe does take Qatari supply, particularly markets such as Italy, Belgium and Poland as well. Europe is on a restocking trajectory at the moment. We need to get stocks as high as possible before winter because we ended winter last year at very low levels. So you'd basically see a fight for cargoes, a fight for any available supply in order to keep respective markets operating and balanced. But of course, it depends how long this lasts. If it's a couple of hours, the impact would be limited. If it's days or weeks, you would see a bigger, more sustained impact on prices.
As we saw in the energy crisis, when it comes to, often Europe bids the highest, the cargoes will come potentially to Europe, with those South Asian markets losing out, if you like.
And we need to remember we're going into summer season as well. So cooling demand is increasing, particularly in other areas of the world, such as the Middle East as well. Egypt and Jordan, we're going into peak summer season and they're not getting Israeli pipeline gas supply as well. So this all has a big impact on the market and an impact on prices because we could have to see these markets have to buy more LNG to replace the lost Israeli pipeline gas supply. So this adds another kind of bullish factor onto the potential for the Strait of Hormuz to shut.
That brings me on to my next question, Henning. And Israel has suspended operations at two of its four main Mediterranean gas fields this week. Is this a move from the Israeli authorities simply to block off supply to Egypt? How do you see that?
No, I think it's a precautionary measure to protect the assets and the workers there. But as Laura said, this is exceptionally painful for Egypt. Egypt only was it last week that the news came out that they'd ordered something like 160 spot cargoes of LNG because of their shortfall in domestic demand. That was even before the Israeli assets were shut down. So this is extraordinarily painful for Egypt. And of course, we should keep in mind that Egypt currently has a severe loss of Suez Canal transit fees revenues because of the ongoing low volume that's going through there. So, but this one by Israel is not a measure to punish Egypt. We think this is a measure to protect the workers of the assets in Israeli waters.
But if you look at the wider political dynamics between the US, Israel, and Iran at the moment, how is that affecting, the global energy picture, Henning?
Energy markets, the last thing purely from an energy market. Of course, the worst thing about this is a conflict and there's a lot of people dying. But if you just look at this in terms of energy market impacts, the last thing we need is another major energy supply region being at risk of severe disruption. The war in Ukraine is still not over. There's fighting ongoing. There's a risk of disruption. There's still sanctions abound and more coming. Now we've got the risk of the Middle East happening. At some point, we're going to run out of energy options, which I don't think will happen. I mean, oil and gas markets are very good at adjusting, but it is a very distressed market at the moment. And we must keep in mind that places like Europe, most economies in Europe are literally only very slowly creeping out of recession right now. And that is partly thanks to inflation coming back down to reasonable levels of about 2 to 2.5%. So if suddenly we see oil and gas prices go back to maybe not even as crazy levels as 2022, but I don't know, let's imagine Brent at $90 and spot gas at something like $30 per MMBTU, we could see inflation go right back up, and then places like Europe are being tipped back into recession. And that has political implications at Eurasia Group, where policy wonks. It causes all sorts of trouble if inflation is higher than GDP growth, because that's a stagflationary environment, which basically means that most people are getting poorer. So those are the wider implications of an energy market in which energy costs are too high relative to economic growth. And that is the environment we're in right now, and that's quite concerning.
Absolutely. How do you see this impacting the markets here, Laura? I mean, in terms of a wider conflict, maybe an escalation there, what kind of impact could that have?
Yeah, well, as I mentioned before, we would see prices rise. So that's not good ultimately for consumers, like residential households, etc. But it's also not good for industry as well. We've lost a lot of industrial gas demand since the crisis of 2022. And it's not really coming back either. We're looking at fertilizer plants shutting down. Steel and aluminium plants are producing less output as well because of the tariffs situation with the US. So the industrial environment is not particularly great at the moment. And if you see prices increase, as Henning said, to $20, $30 per MMBTU, this is very painful for Europe.
Absolutely. But Henning, with oil markets, how have they responded to this current crisis? I mean, the prices haven't sort of peaked as much as in gas.
So oil markets, we come to see this every time there's a crisis. What everyone thinks of oil markets, they're very, very good at adapting to crisis and to new situations. It's always, I think, a little bit of a marvel, actually. But just to keep it sort of in dry terms, what's happening is, first of all, as we speak, oil is still flowing. That's why there has been no disruption through Hormuz. Insurance rates gone up and everyone's a bit worried. And there's been a couple of delays, but the actual volume hasn't been impacted. What's happened so far is that Iranian crude oil and condensate volumes are down. Because some of the private shippers that used to take Iranian oil are refusing to take that because of fear of being bombed. But the Saudis and Emiratis have actually added barrels to the market just over the last week or so. And that is because the market structures of the forward curve for Brent crude oil is in quite steep backwardation right now, which gives oil producers a really strong incentive to add barrels into the market right now. So if you have them, as OPEC and especially the Saudis and Emiratis have been saying for a couple of weeks now, or actually months now, that they would add barrels, but so far they've talked more and actually done less. But in the last couple of days, they have added quite a lot of barrels. They're making a lot of money by it. And you can say things like, we're monitoring the markets very closely and ensuring stability of supply. So they get to say the right things, and they also get to make a bit of money on it. But even producers elsewhere, I mean, if you're in the United States, the last months were not good. because of the announcement by OPEC to raise supply or reduce their supply cuts over last year that they've been doing for the last few years. But the market conditions over the last 2 weeks have changed in a way that if you have additional oil, you just throw it into the market. So that is one of the reasons why oil hasn't surged more than some people might have expected. And the other aspect is there is a lot of supply versus demand growth. You saw the IEA figures at the start of this week. They said that oil demand growth would be about 750,000 barrels per day this year. We actually think that's even an overstatement. I'm pretty sure it's quite not much more than 500,000 barrels per day for 2025. But supply growth is expected in excess of 1 million barrels per day. So we have a building oversupply. Because demand growth, especially in China, is pretty much zero, and producers are adding. So until that changes, be it, for instance, in the Strait of Hormuz or some other disruption, the reality is that there's more new oil coming to the market. The new consumption is being registered, and that means oil markets are at this stage pricing in the risk of a disruption rather than the physical disruption.
If we look at the States, I mean, is this increasing Europe's dependence on LNG from the US, Henning, as well?
Potentially, yes. I mean, we've got the moves by the European Commission to try and phase out Russian gas entirely by 2027. I mean, there'll be some negotiations on the fringes of that, but by and large, that's probably going to happen. Now, with the Middle East, a risk factor that will put off a fair few people of engaging more in long-term purchases from the Middle East. And so, of course, where else is new LNG coming to the market? The United States is one of them. But of course, we have those tricky trade talks between the EU and the United States, which also make things a bit complicated. So it's not a done deal yet that the Americans will walk away from this as profiteers and saying like, hey, we've taken all the future or remaining demand of Europe. That's not a done deal yet, but it's potentially the case. The one country that is really benefiting from this is, of course, Norway. That is the closest supplier of oil and gas to Europe. It is the one with which the European Union and the UK has by far the best relationships. So anything Norway can produce in addition to what they're doing now will go to Europe at very good prices.
But they're producing at the moment at absolutely full steam. I mean, where's the upper limit here, Henning? I mean, is there much more that they can actually export?
I think if the price and the conditions are right, you can always get a little bit more out. But you're right. I mean, Norway is not in a position to raise its oil and gas output by 20% or so. Again, I think it looks pretty maxed out, but I think it can always push a little bit if the conditions are right.
And Laura, I mean, how do you view this? Obviously, the European Commission is very keen to end Russian gas. It's now saying it's going to look to ban it very, very soon. Are we facing an LNG? Real squeeze on supply in Europe and the years ahead?
Yeah, I think definitely the biggest impact is going to be at the end of 2027 when we lose the long-term contracts. We think that Europe can get by with the spot volumes and the short-term volumes being ceased over the next kind of year or so. But that is going to be the biggest impact really in 2028 when we lose the long-term pipeline supply and the long-term LNG contracts. And we think that really the biggest impact is going to be on the CEE area. Of course, this is a landlocked area. We're talking about places like Slovakia, Hungary, etc. They are landlocked and they would have to tap into the LNG market. And so to get LNG into Europe and then through the pipelines over to Slovakia and Hungary is very expensive. So they're going to be kind of most at risk. But we also need to remember that the dynamics and the situation in 2028 are going to be quite different to where they are now, because we have a lot of US LNG coming online and Qatari volume coming online as well. So we've already started to see that US LNG starting to come online. We've got Plaquemines and Corpus Christi expansion this year and more to follow. And then in late 2026, we have Q4 2026 for our first cargo. We'll see Qatar starting to come online. So We do think prices will generally be lower in 2028 than they are now. But of course, if you knock off a lot of Russian gas supply, it will, of course, have an impact. And we will need to see Europe being more heavily reliant on the LNG market because there's very little flexibility elsewhere. We've just spoken about Norway, for example, very limited flexibility to get a lot more gas supply from Norway. The same with Algeria, where we have tight domestic balances. Azerbaijan is pretty much maxed out as well. So limited flex, more reliance on the LNG market, and we'll be looking to the US and possibly Qatar as well for that.
So, very tense moments in the weeks ahead, I think would be fair to say, but maybe in the mid to long term, there is more supply coming on stream. Laura and Henning, thank you very much for joining the Plugged In podcast.
Thanks, pleasure.
Nice to speak to you. Thank you.
Thank you. As we said, this situation is moving very quickly and is one that we're covering closely here at Montel News. You can stay up to date with the latest coverage of the conflict and its impact on global energy markets at montelnews.com.